For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. Hey traders, Stacey Burke from Stacey Burke Trading. Today we're talking about mastering the high and the low setups. So I've had a lot of questions regarding the playbook, and it is obviously coming together. A lot of detail gone into it, and hopefully we'll be finishing it up shortly. But today we're talking about mastering the high and the low of the day. And one of the things that I've talked about in the past is obviously very specific template of timings, high and low of the day, major round numbers, and then having best setups and knowing if you're buying low, selling high, if it's a trend trade, a reversal trade, or a trading range. There's only 3 things that markets do. And those are the 3 things. So all the other things, aside from news being on the calendar, are basically, to me, just variables that the more you add into your trading, the more complicated it gets. So today we're just going to review the high and low of the day, the major understanding of the high and the low of the day. We've talked about the day count, and critical to understand day 1, day 2, day 3, but the same thing applies with our sessions, Asia, London, New York. Now I come to the screen, I'm only trading New York. And I know traders are around the globe are trading Asia, they're trading London, they're trading all 3, or they're trading in the gaps, they're just trading. Now, my approach to the markets is targeting around that 1 hour a day around the New York Open. And again, I'm looking for setups. And so we're going to run through today just looking at a previous video that we talked about was if you only took this one setup, and that was using the previous day's high and low, regardless of the session that you're trading. Some of them are going to be scalp, some of them are going to be 3-star and 5-star. 5-star typically will be a 3-day setup. But again, if we have a 3-session setup, high a day, low a day opportunity off of a previous day's high or low, especially, that can have the potential to go from one side to the other, short squeeze, long squeeze, in reversal trades. So no matter what you're using, TradingView, MT4, C-Trader, whatever, I have no idea, whatever you're using, it doesn't matter. Now I have this indicator that programs the previous day's high and low on my charts. I can't share that. It's a locked indicator, otherwise I would, but you can just draw lines. Now, you're going to have different types of days. So you're obviously going to have inside days where we don't hit a previous day's high and low. There are certain inside days that are very tradable, 3 peaks, 3 levels of rise, or 3 levels of fall for a reversal trade opportunity from low of day, high of day, or high of day, low of day. But there are other templates that are going to be built around the news, so we can have the news acting as a catalyst. The news, for example, today was at 10 a.m. New York. It's later in the session. The market gave us explosive trades prior to that even coming. But again, it all comes back to timings. And so I talked about front side and back side of moves. The front side is where we are in a move. We're looking to possibly sell the high of the day. We don't want to counter trend the move until it breaks the front side. Now, coming in the New York session, this market was already on the back side of the move. And then our timing window kicks in. So again, the traders have asked, what do you mean by working the high or working the low? Well, if this is our box, so again, coming back to this is the previous day's high, but into the close of the session, the U.S. session made a lower high of the day. Coming into the new day, we've made a low of the day, and then the volume has stayed inside of that range. Now, obviously, they took out the lower high of the day, but again, for me coming in the U.S., as I've said before, when I come to the U.S., all the cards can be on the table in a lot of cases for a best trade setup. And then we get our peak formation highs into the open of the session. First 15 to 30 minutes, it breaks down and continues through the low of the day towards yesterday's low. Now, I had a trader message saying that trend lines are rubbish, and I agree totally. These are not trend lines. This is gauging front side, back side. And then I talked about geometry. This is a rectangle, and then a 100 pip expansion of the range. Somebody asked me to go into more detail about that. There is no detail. It's 100% expansion of the high and low projected as a profit target. If you need to know more about that, go read Edwards and McGee, Schabacker, Peter Brandt. It's just classical charting, 100 pip or 100% expansion of a geometrical structure. This is a rectangle on the Canadian dollar today. So again, figuring out and understanding, this is like the bow and arrow trade. They pull the bow and arrow back, boom, hitting yesterday's low. And again, reminding myself constantly, I want to be selling the high and buying the low, and vice versa. And in some cases, you're only going to get geometry inside, but it can be a perfect best trade setup for a measured move and a asymmetrical risk reward. Again, US session, by the time I come, we have all the information on the board. If you're trading Asia or London and you're trading inside, not to say there couldn't be a setup, but ideally you want to have something at a daily high or low in those sessions. The Swiss franc auctioned up into yesterday's high. Again, front side, back side, not a trend line, it's front side of the move. My thesis is that when this breaks, if I'm going to be selling, looking for a long squeeze, it doesn't quite break out, but we get our long squeeze if you're trading the Swiss franc today at the high of yesterday's range. Again, not quite a full measured move, but we've gone all the way down to yesterday's low from the high of the day to the low of the day. Again, timing window, 3 levels of rise. We have a low of the day and we trap volume up high. I'm not using numbers or anything. You can just do this on any chart. Go back, do your homework on your charts, whether you're using TradingView. You want to reference, if you need to draw the previous day's high, just draw it. You don't need an indicator. I leave these lines on my charts. So we have a long squeeze up high. They break structure, 1 push, 2 push, 3 pushes, and roll over at the beginning of the new hour. So if you're using 15-minute charts, understand that this move coincides with the beginning of a new 15-minute bar at the beginning of the second hour. Japanese yen, again, another example of a market where a previous day's low and high have not been hit. We know this market's in a large, has been in a large uptrend until recently, and then we saw the big break in structure, huge day of volatility, over 500 pips last week. But again, the same principles apply. High and low, it breaks down in the US window. So again, the trend trade from inside. This is the consolidation and the trend trade from inside. And again, if you're targeting the previous day's low or you're not getting there, I would be targeting at least a 100 pip expansion of the range. If it breaks through, you can trail these down lower if it was on its way to the second full expansion, but takes you out if it reverses abruptly as we get another hour into that trade. British pound, we'll just bring this across and look at Monday's session. Monday was a fairly choppy, messy day, but you'll notice that the previous Friday's low of day, just double check that, high of day, becomes an area for trapped volume on day 2. We don't take out the previous day's low, but we break structure prior to the US 12 candle window. We break structure, which is the breakout of our higher highs heading into the window. Thesis being that the low of the day may now be locked in. The market comes down at the beginning of the US 12 candle window and begins to auction up and accelerate. So again, for the hindsighters, this is a template. The V bottom is the template into the rectangle, and then the continuation as we get to our end of our first hour. Again, pay attention to the time. First hour puts a high and low in place. The market is coiled now for a explosive vertical move coming out of a consolidation rectangle. British pound. And for people who are looking to counter trend that at the high of the day, it's important to understand that you take a bigger picture look, because this market now is not targeting yesterday's high, it's targeting the high of the week. Now ideally you want to be positioned in the move on the way out, breakout pullback trend. This is day 2 trend trade back to the high of the week. We started inside. Day 1 comes down, goes sideways, traps volume. It breaks out of the previous Friday's high of day, pulls back, and explodes for the vertical move. The euro, very similar, and again, you've heard me say this before. If a market consolidates without taking out the high or the low, so we haven't taken out yesterday's high, it consolidates, it puts a peak formation high in place, auctions down, puts a peak formation low in place 1 hour prior to the US 12 candle window, trades back down into that low and coils and squeezes for the explosive vertical move. You can only go long in this area. 45 minutes into that first hour, we are now in the long direction. The second hour opens and goes vertical through the high of the day. This whole day then becomes a consolidation. And again, in absence of a previous day's high or low as a potential target, this market may be headed towards 2 full expansions of the range. It's done one and a half at this point. Hasn't taken out previous day's high, but traders, savvy traders, obviously have probably locked in the bulk of those profits on the move into that high. And you'll notice that reversal happens at the beginning of the third hour. So if you want to lock in profits, let the clock help you decide when you can do that. So again, the euro, the pound, Aussie, and New Zealand all move very similar. And so if you want some different variations of very similar templates, go and screenshot these to see the subtle variations of trades that all exploded in the same context, same time, same similar relationships without taking out a previous day's high or low. New Zealand dollar, again, this is prior to coming to the US session. I just draw my rectangle at the bottom. We have a consolidation that breaks out prior to our US session. Thesis is that the low of the day may now be locked in. We get our coiled squeeze into the end of that first hour. So again, this is a running wedge. These patterns are repeat over and over and over again. End of the first hour in a long trade, market explodes vertically through the high of the day. Now on to my favorite. Oil and gold and the indexes tend to do these behaviors over and over again. Oil was a textbook low of the day squeeze continuation. It went down and locked in the low of the day in the hour prior to the 12 candle window before breaking out, and then gave us our little V bottom. As we've heard me say, it broke structure on the inside. It went higher, so we've made a higher high heading into our US session 12 candle window before the New York market opens in that second hour, and we get our little V bottom dump, the dump and pump, and that market explodes and just keeps running to the previous day's high. So again, second hour opens, We get our little consolidation V bottom, the same trade setup that we reviewed on the Canadian dollar that happened 2 days in a row last week at the 9:30 New York Open. This one just happened to happen at the beginning of the second hour. The low of the day is locked in. Again, coming back and just recognizing the dump, the W, the breakout pullback, breaking structure, and the vertical move to the previous day's high. Now, this low of the day was the same low of the day from Friday that we had our short squeeze off of yesterday at the beginning of our US session 12 candle window. Again, beginning of the second hour, a vertical explosive move through the lower high of the day made in the gap time. Same trade setup, exact same explosive move. Dump it down, pump it up. Now we had this explosive short squeeze on Friday. Again, we traded down to the previous day's low. They broke structure on the inside and made a little consolidation down low before dumping it into the open of the session with a triple bottom, gain higher high, and our little V bottom right at the end of the first hour for the explosive vertical move. Low of the day, high of the day that kept running. That's on Friday. Now we come to today, fast forward to today, we have basically the same setup. We have day 2, Tuesday, the high of the day. They dump it down, they break the low of the day. They pull it back and dump it into the low of the day in that first hour. Again, V bottom, low of the day. We're going to target the high of the day first. We get our little dump, reversal, end of the first hour. Second hour explodes and goes vertical. V bottom at yesterday's low. A little W formation. The low of the day is locked in. They dump it into the low. Fantastic, massive, massive trade setup today. I know several traders hit this. It was a blessing. Absolutely rocket ship of a trade. So first target can be the previous day's high. Second target obviously is high of the week. We haven't quite got there. We got to the previous day's high. We just haven't gotten all the way up to the high of the week. No telling what day 3, day 4 may present for us. Talking about the high and the low of the day. They traded down to the low of the day. They reversed and locked it in. At our 12 candle window, they dump it into the low of the day for the explosive vertical move through the high. S&P, same type of setup. So again, for the hindsighters out there, I'm coming to the screen in the US session. So all this other stuff to me is pretty straightforward. I'm drawing the high and the low. It either breaks a level or I redraw them. It's as simple as that. There's either a template for a setup or there isn't. Yesterday on S&P, we had the market moving down, making new lows before breaking structure in our gap time. When it breaks structure, we've talked about the dump and pump. We had 2 sets of news. The second set gave a second dump, locking in the previous day's high as our new low of the day level. They traded back down into the peak formation low for the long trade. So again, when traders say, where do you want to get in? I want to get in below this area, below the previous day's high of day that now becomes our new low of the day. When they dump it down, I'm getting filled as best fill possible. There might have been an entry down at the consolidation, end of the half hour mark, or beginning of the half hour mark. Again, timing is your friend, and adding positions on the breakout pullback, thesis being it's going back to where the dump began. But talking about today's trade, we had a high of the day, we had a low of the day. They broke structure on the inside again in our gap time. They break structure and then dump it down into the low of the day. 45 minutes into the session, they lock in the low, breakout pullback, second hour about to open, explosive vertical move. If you want to see some subtle variations, again, look at all the indexes, identify just the same setups, but some subtle variations. Again, without taking out the previous day's high, the market goes into consolidation. There's a low of the day. They break down through the low and pull back. There's our low of the day. They break down again, pull back, and trade down into the low, end of the hour, beginning of the second hour. We get our W reversal, squeeze for the vertical move. This is a setup. This is not something that somebody just happened to guess and think that was. That's what you should be looking for. There's a high and a low. They're working into the low at the beginning of the timing window. They lock in the low and start to reverse at the end of the hour. You can only trade in one direction, and that's from the low back to the high. It explodes and goes vertical. When it goes vertical, the minimum target is going to be the high and the low of the day. One full expansion, it's still going. Might hit the second expansion, no idea. Dow Jones 30, same, again, different index. You can look at the DAX, you can look at any of these. Point being is that if you scroll back through your charts, you're going to see templates, 3 levels of drop, 3 peaks, explosive moves. You're going to see explosive coils that come off of the previous day's high and low. You may be the first mouse because you're trading London. It may move in London and give you 50 pips. Retest that at the open of the U.S. session for a explosive measured move in the U.S. window. Once all the players are at the table, all the money's on the board, we may see those larger moves play out. We can see those high of the week, low of the week sometimes in London. We can see those sometimes when they break out right away, high of the week, low of the week in Asia. And that's where we get a low-hanging fruit trade in the U.S. session or a continuation trade in the London session. But once they break or test a level, that's when we can see explosive moves. We can see a move from one side to the other. Trap traders on the breakouts of those levels pull it back inside. Trap traders trading back into the extreme for the sharp explosive coil back in the opposite direction, following the money. Where is the money? If you master these high and low of the day setups and the templates and the day counts, these explosive trade setups will start to show up more and more and more, and as the only trades that you are looking for. So hopefully that makes sense, traders. Keep it simple. Master the high and low of the day. Today was unbelievable. Yesterday we had some explosive moves on oil, a couple of the currency pairs, but today, massive moves. We're going to have more big moves this week. Keep it simple. Look for the best setups, and may the markets go with you.